Good morning, everyone, and welcome to the FinTech4Good Sustainable Housing Roundtable series. And my name is Xiaochen Zhang, the president of FinTech4Good, and the series is co-hosted by Ann Epstein, the co-chair of FinTech4Good Sustainable Housing Task Force. And this is the fifth of our series. And today that we are going to focusing on investing in sustainable housing, and we have amazing speaker who will share with you their experience and also different instruments which are available for the sector. And in the past few episodes that we have shared with you of different digital innovations and how they are transforming the housing sector. And it's really amazing, and all the recordings are now available on YouTube. And the reason for us to launch this series is very simple, and we want to just identify the most influential and impactful digital innovation for sustainable housing. And we hope that through digital innovation, we can make housing affordable, healthy, smart, eco-friendly, and safe. And to achieve that, and definitely the existing business models and the existing technologies may not be sufficient. So that's the reason why we are looking at blockchain, AI, IoT, and other digital innovations, and also see how they are already being adopted in different countries. And so in this episode, of course, that or in this roundtable, and it's very clear that we want not only to see the innovation works, we also want to see that innovations can also attract proper investments from the space. And there are mainstream venture capitalists who are looking at digital innovation for sustainable housing. There are also opportunities from alternative finance, impact investment, and impact investing, and other innovative investment models which are available for this sector. And without further ado, and I would like to just introduce you to Ann, and who is continue to moderate the session. Ann.
Thank you very much, Xiaochen. Okay, let me just share my screen. Great. So thank you to our panelists who are here for an encore presentation. We really appreciate your willingness to do this with us again. And for those of you in the listening audience, you're in for a treat because I've actually heard this before, and our panelists have some really interesting things to share. I joined Xiaochen in this journey around the opportunity to launch an accelerator for sustainable housing, because we think this is really critical and important. Around the world and in the US, we have a real problem with affordable housing. And it's not just affordable housing, there's also sustainability issues, and the kinds of improvements that we've seen in other types of consumer goods we don't see in the housing sector, where every generation of product becomes better, cheaper, faster. That is not the way it is in housing today. And so when we ask the question and hypothesize, why might that be? Why haven't we seen the kinds of innovations that drive down housing costs, that improve the quality? Why don't we see that in housing today? What we come up with is that it's a relatively complex value chain. And this is just a slide that sort of kind of conceptualizes the value chain. But you can see across the top, there's development, there's the financing in terms of selling, buying, both of the funding of the development, but also in terms of the transactions to the individual owners, and then the operational impacts, aspects of housing. And you can see across the left-hand side that there's private sector involvement in all those spaces. But this is a place where there's a lot of public sector involvement. And every public sector across the world has slightly different laws and slightly different infrastructure and slightly different incentives. And in addition to the public sector, you also see nonprofits involved, because housing really is a right. And the nonprofits not only create subsidy for the ecosystem, but they're the ones who are really representing the community and representing the people who are closest to this issue. And so this requires a lot of public-private partnerships in order to make this successful. For an entrepreneur to be really successful and make meaningful change, it requires an ecosystem around them to have the right public sector, nonprofit, and private sector involvement to actually make that change. And so that's what we're really trying to do, create that interest in that ecosystem so that we can launch meaningful change in this space. And I think our panelists today will provide a lot more insight into the role that that each of those organizations can play in a lot of this space, particularly in terms of the financing side. So with that, let me introduce you to our panelists today. The first up will be Eve Picker. Eve is the founder of Small Change, a real estate crowdfunding platform that raises funds for meaningful real estate projects to build better cities, like Kickstarter for real estate, but with a return, providing investment opportunities for everyone who cares about cities and wants to make change, all through a fluid and compliant technology platform. Small Change was ranked as one of the top 7 real estate crowdfunding platforms by US News, and Eve was named as top innovator in the capital category by Hive, and she is a fellow at the Rockefeller Foundation Bellagio. Amongst her many urban adventures, she's developed a dozen buildings, founded a nonprofit, built Pittsburgh's first teeny house, organized a speaker series, launched downtown Pittsburgh's first co-working space, and co-founded the wildly successful Open Streets. And she now hosts a weekly podcast series about real estate impact investing, which I'm a fan of. Then, after Eve goes, we'll hear from Jade Dai. Jade is the Chief Financial Officer for GL Capital. As the controller of the company, Jade oversees investor relations, secures investments, and works with the CPA teams for tax strategy on all existing properties. Jade is also A-level capital venture fund advisor and SoGal Baltimore and DC lead. Early in her career, Jade invested in early to mid-stage companies with high potential for exponential growth. Jade is also the founder of World Youth Value Society, a nonprofit that runs various charity and educational programs in China, Kenya, and the United States. And then finally, last but not least, we have Alon Cohen. Alon is an experienced Israeli entrepreneur who excels in strategic thinking and innovation from a global and sustainability perspective. He has expertise in engineering, strategy, investment management, including impact investments, alternative and real estate, financial risk management, and fintech. He is a lifelong learner and a champion of tokenization. And with that, I turn it over to Eve because I can't wait to hear what they all have to say.
Good morning. Let me see if I can share my screen. Okay, is that correct?
Yeah.
Okay, so let me just minimize everyone here. Okay. So my name is Eve Picker, and I'm the founder of a real estate equity crowdfunding platform called Small Change. But before we dive into that, I wanted to tell you a little bit about myself. And I cannot forward this. When I was little, I liked to play with Lego blocks. So I became an architect, and I studied in Australia at the University of New South Wales, and then I interned in Vienna, Austria. But I really wanted to learn more about cities, not just buildings. So after working in Sydney for a few years, Sydney, Australia, I took myself off to New York, where I studied urban design at Columbia University. And then, very unexpectedly, I moved to Pittsburgh. There I worked as an urban designer in the planning department for the city of Pittsburgh. And the more I learned about the city, the more I fell in love with its really spectacular architecture, its differentiated neighborhoods, and its very unique grittiness. So I began to buy and remake buildings, but not buildings for the faint of heart. Abandoned buildings in abandoned neighborhoods that no one was ready to invest in. And I tackled buildings like this one, the Liberty Bank building in East Liberty. It had been empty for 15 years when I bought it from the city. There was not much left to save except for the walls. Making the buildings functional and beautiful again was the easy part. The biggest challenge I had was finding the capital to redevelop them. Neglected neighborhoods do not make bankers happy. Each project had its unique challenges, and each always had a financing gap, which I became very skilled at closing. Capital was found through a hodgepodge of public and private funding. Architects, contractors, and family became reluctant partners. But despite the financing hurdles, the projects I built made change, and they were very successful. People came to these neglected neighborhoods in droves, and I loved every moment of it. And then around 2010, as banks continued to consolidate and become even more skittish, and as federal funds dried up, it became increasingly impossible to continue the work that I was doing in Pittsburgh. My financial partners had evaporated, which brings me to small change. I took the knowledge I had accrued and applied it to the most difficult part of creative deal making, financing the projects. My knowledge, coupled with some brand new laws, permit us to innovate with capital creation not possible before 2016. So what we know is that banks are stuck. Innovation makes them really nervous. They want to finance tried and true solutions, not new ones. But we need innovation, lots and lots of innovation, to build better cities. The question is, how can we break the cycle? How can we finance change? At the same time, FinTech has arrived. FinTech is the merger of finance and technology and has disrupted traditional financial services, and it's one of the fastest growing industries. You've all seen and used it every day. When you shop on Amazon, when you deposit a check using your mobile phone, when you make an online transfer from one account to another. There's tons of innovation in FinTech. And finally, along came the Jobs Act. The Jobs Act stands for Jumpstart Our Business Startups. It's legislation enacted in 2012 by the US government to help small businesses form capital. How? By introducing some very cool changes to securities laws that have shifted crowdfunding for donations to crowdfunding for investments. And this has opened the door for everyone to invest. This is a sea change. Until now, real estate investment opportunities have been only for the very wealthy, the 3% of the population that we call accredited investors. The Jobs Act has made it possible for anyone over the age of 18 to invest. That's 100% of the adult population instead of just 3%. World Bank has estimated a global crowdfunding market potential of up to $96 billion by 2025. Just keep in mind that just 9 years ago, in 2010, that number stood at less than 1 billion. This is how capital is formed. This is investing democratized. As Steve Case so eloquently put it, crowdfunding is an innovation in entrepreneurial finance that can fuel the rise of the rest globally, and this is being played out in many ways. There's one more thing to add to this story. Let's not forget impact. What makes small change different from other real estate crowdfunding platforms? Not only can anyone invest on our platform, they can invest to make change. And we focus on three important aspects of real estate that we believe will incrementally make our cities better places for everyone: mobility, community, and economic vitality. Every project listed on our platform is assigned a score based on how well it meets that index. The minimum requirement is 6 out of 10. Below that bar, and the project is not a fit. Do you want to see how that plays out? I'm going to show you a few affordable housing examples listed on our platform, just to give you an idea of how we can use it. So this project, Gillespie Labs in Philadelphia, is an Opportunity Zone Fund repurposing of an industrial building into a lively mix of uses, including affordable housing, incubator space, and more. The project budget was $7.2 million, with a minority developer at the helm, Mosaic Development. Almost $300,000 of equity was raised on small change. They offered a return targeted to 18% internal rate of return, with additional Opportunity Zone tax benefits over a proposed 7 to 10 year term. And that building is under construction now. Bungalow Gardens in South Central LA is an award-winning homeless housing project in an iconic LA bungalow court revival. A ground-up 8-unit project. It will house 8 homeless people for 15 years of tenants guaranteed by the city of Los Angeles. The developers are a nonprofit CDC. The project budget was just $1 million, and $100,000 was raised on small change. They offered a 9% preferred return with no upside, because it's going to be affordable housing in perpetuity, so there is no profit, with a 5-year projected return. And this project is also under construction. And here's a very different take. This is for sale affordable housing in New Orleans, called Starter Home 2. These are 2 affordable ground-up for sale houses built on leftover vacant lots. The developer is an architect and has been building this thesis of building on leftover vacant lots in New Orleans for a while. He needed almost $100,000 in equity to move forward on the project, which we raised on our platform. The total project budget was $525,000, and he has now sold both houses. He offered an 8% preferred return with 30% profit share. And another very, very different project, Innovation Houses in Chicago, which is mission-driven housing, revitalizing the really underserved south side of Chicago. So again, a nonprofit was involved, and they have purchased 3 houses, which will provide 36 affordable rooms at below market rate in exchange for volunteer hours in the community. $550,000 is the project budget, and around $75,000 was raised on small change as equity for each purchase. And they also offered an 8% return with 45% profit sharing upon refinancing after about 3 years. They have purchased their 3 houses, and they are in the midst of renovations now. And here's a tiny house in Pittsburgh that I built leading a nonprofit I had at the time. It was a test case for small homes in an abandoned and racially segregated neighborhood with hundreds of vacant lots. Over 600 people lined up to see this tiny house in a 3-hour open house that was held. And I venture to say that most of those people would never have set foot in that neighborhood. The project budget was $230,000. We raised $100,000 in debt because we could not get a construction loan from a bank, because this was a first of its kind project and no bank would finance it. We offered debt at 7.5% with a full 7.5% return in the first year. And since the house sold 2 months after the offering closed, it yielded a pretty high internal rate of return. So what's next in the crowdfunding evolution? Right now, the rules are getting an update upgrade, and and developers will be able to raise much more funds. Right now, they're limited to $1 million a year. They'll be able to raise up to $5 million a year, and investors will be able to invest much more as well. And with that, we think that crowdfunding's role in capital formation will be solidified. Thank you.
Thank you, Eve. Good morning, everyone. It's great to join in Monday morning. I hope everyone had a great weekend. Thank you, Eve, for sharing. Crowdfunding is a great platform that a lot more people can join the real estate investment and to support sustainable housing. I'm going to share my screen. And Xiaochen, could you just confirm, can you see my screen? Great, excellent. My name is Jade. I'm the one of the co-founder of GL Capital. GL Capital is a real estate investment fund focused on commercial real estate, multi-family housing, mixed-use properties, green developments, and the property technologies. I'm responsible for investor relations and fundraising. So far we make investment in Baltimore, Maryland, Norfolk, Virginia, and Philadelphia. We have more than 100 investors from states, China, Singapore, England, Canada, and India. Below are some pictures about my company. The picture on the left side is one of the projects we made investment in Baltimore City. And the second one is my team. Me and my partners, we met each other from Johns Hopkins Carey Business School. We studied the company when we were in school and started making investment. This is the one type of the investment we do. This is multi-families in Philadelphia area. It's 45 beds. And the current owner bought a deal for $5.8 million. And now we are $3.9 million under contract. Is a great deal for us. We are going to acquire this deal end of this month. It's still open for investors. So if anyone have interest, feel free to contact me. So today I'm going to share with you the challenges and opportunities to make investment in sustainable housing from a real estate investor and the fund management side. I divided the challenges in 4 different types. The first one is the environmental challenge. Climate change, global warming. We all know that the people and the buildings produce a lot of the CO2. And also the not efficient energy buildings also waste a lot for the utilities. And the mold also happens a lot in buildings too. But why they affect us? For example, if you make investment in Ocean City, Maryland, or Miami, Florida, this area, the coastal cities, the global warming can make the water level keep rising. And when you buy properties in those areas, you might need to pay very high flood insurance. And the next one I would say is the finance challenge. The development projects comparable to the sustainable housing usually have the high interest rate if you need to borrow money from the bank. And also the loan amount you can borrow from the bank are also comparable smaller than the sustainable housing. So that required the developer or the owners need to have the a lot of the cash reserve when they want to build the development sustainable housings. And when we adapt more and more real estate technologies in real estate, how can we protect our tenants and also our investors' data? How can we make sure that data don't be hacked? That's also something we need to think about. The last one I would say is the government regulations. Real property tax, zoning are always the very important thing to consider when you make investment. For example, one of the buildings we bought last year was $5.5 million, but the real property tax we pay is based on the value of the $7 million. Even though we hire a lawyer trying to appeal the tax, but they take us more than a year where we still haven't got the tax payment done yet. So, and today I'm going to use the one of our projects to talk more about those challenges and also what are our solutions to decrease those challenges. This is a mixed use. It's mixed multi-families and the retails in the Baltimore downtown area. Before this building were offices and the retails. We turned the offices to apartments. It's 22 units. The challenging we were facing almost are all the challenges I mentioned before. It is high when we borrow money from the bank. It's high interest rate, and also the utility bills are also very high. Can you imagine that when we just bought this building, every month we pay more than $10,000 water bill, and also mold also happen in the basement because basement too. And after we finish renovation, how do we do branding and how do we make sure the building fully leased out? Those are the things we need to think. So what do we do? For the financing challenges, we borrow money from the C-PACE lending. Greenwork Lending is a lending national providers for the commercial PACE financing. They help the property owners in their commercial properties to drop the operating expense and become more energy efficient. The interest rate they give us about 5%, so that's very great. But usually when you borrow money for the, especially for the development projects, you only get the bridge loan. Usually interest rate were about 7% to 12%. So this helps us to solve the financing challenge. And also, it also helps us for the utility too, because we are using the high efficient utility system that can help us to save the utility bills. And also for our tenants, when they move in this building, this is a green building. Also, will help them for the utilities. And because it is a green building, it also will reduce the CO2 emission to help the environment. This building, built in 1960s, is a historical building. So the second way we're trying to reduce the finance challenge is that we are using tax strategies. We applied the credit, the first site credit from Downtown Baltimore Partnership and the Baltimore Development Corporation that can give us more funding to help us decrease the equity we put in this building. We also used another tax strategy called cost segregation. Cost segregation allows us to take a greater amount of the depreciation in the first year. So that helps us and our investors don't need to pay them much tax when we file tax returns. Also, besides making investment in real estate properties, GL Capital also like making investment in real estate technologies. We also would like to use those technology before we make investment. This one is called SenseWare. SenseWare can help us detect if any order gas leaking or and also the humidity of the air. That can help us to avoid the mold. Besides that, this is another technology we are using. It's a portfolio property management. It's a very cool system. They have the system. They have automation systems. In the traditional way, if the tenants have issue, tenants report the issue to the property manager. The property manager are going to find contractors trying to fix the issues for tenants. But because of this system has automation systems, so when tenants have issue, the tenants put the issue on the system, then the portfolio will automatically to select the contractor for the tenants. So many times, even though before we realize the issue happening, maybe the contractors already in apartments are fixing the issue or or maybe they're already on the way. So that saves us a lot of the time. And also this system, they also have another cool technology. It's AI property management, Lisa. Lisa is like a robot leasing agent. She can answer the questions the potential tenants might have, like where are the apartments located and how much are the rent. That's very great because this saves a lot for the agents, leasing agents' time. Also, we also think about the tokenized before. When we just handed the Philly deal under contract, we will also think about the tokenized because if we tokenize the real estate, it can improve the liquidity to help us. I believe later Alon will talk more about tokenized. Even though we didn't use this for this project, but in near future, GL Capital will very highly consider to use tokenized for our investment. This page is a summary of how these technologies help us for the leasing side, because using the AI leasing agent. AI leasing agent reply the questions very quick and steadily, so it can decrease the low vacancies, and also because we are using the automation systems, it also can improve the tenants' experience when they are staying in the apartments, because the issues in apartments will get solved faster. And also, the two technologies I didn't mention before, but here I talk a little bit, is an investor portal. We're using investor portal for our investors, so that allow our investors to be easier to check their investment, their returns, and also the documents related to the investment. Besides that, also let me go back. Besides that, also the technologies we can use for underwriting can help us save a lot of time when we analyze deals and for the new deals. That's all I want to share about the solutions we are using when we make investment in sustainable housing. Thank you. And thank you so much, FinTech, for having me.
Thank you, Jade. And again, we're going to switch over to Alon for his prepared remarks, and then please do feel free to ask questions in the Q&A box, and then at the end we will leave 20 minutes for questions, so we will get to everybody's questions.
Thank you, Eve and Jade, for sharing your experience and insights, and thank you, and Xiaochen, for having me. I'll show my screen. Okay. Can you see it? Yes? Okay, great. I'll share with you some of new concepts and some ideas. The main contribution of FinTech to the SDG 11 challenge, safe and affordable housing, especially in the post-COVID-19 world, is token economics. I recommend the course of System Innovation website on this subject of token economics. Blockchain enables token issuing, smart contracts, and peer-to-peer networks that create the token economics. Blockchain enables a paradigm shift, global plug-and-play network of services for demand. No need to live in a costly neighborhood to participate in the global economics. We can see a good example of this idea. The last few days, some companies from the Silicon Valley cut pay for remote workers fleeing Bay Area to a less costly neighborhood. Blockchain enables value chain efficiency. Smart contracts and value chain management increase efficiency and reduce construction costs. Real estate tokenization is the idea of issuing security tokens backed by real assets, attracting more resources to housing and infrastructure by making the investment attractive. It will be stable, liquid, and tradable, increasing asset supply. Living as a service, it's a new concept, and I'm looking at living as a service utility token, following the trend of service-oriented architecture. Issuing a basket of utility tokens for living as a service, expand housing to living services, including housing, utilities, and food, ensuring a complete solution. A use case that can use this idea will be the universal basic income, a concept that is now more getting traction relating to the future of work. Consumption in advance is another idea. Buying living as a service utility tokens in advance, enabling consumers to invest in their future consumption. It also increases certainty for service suppliers, lower the risk, and reduce housing costs. A use case for this idea will be the hedging of pension portfolio. Opportunities for impact investors are the huge market of liquidity of real estate properties of $200 trillion. And if we are looking at a liquidity premium of 20%, so it's a huge number. Some challenges and new ideas that will we'll get some ideas for the accelerator, some opportunities for the accelerator. A need for the mass market for enabling liquidity and the trade of tokens. I recommend to support accredited investor reform, expanding token holders' potential, enabling access to attractive investments asset class. Just a few days ago, August 26, the SEC expanded the pool of sophisticated investors who can purchase unregistered securities. In this reform, we have to balance between, from one hand, the access to types of investments that could increase portfolio performance and diversification, and from the other hand, the knowledge and the asset base in order to understand and observe the risk. Other challenges and ideas are harmonize and standardization of global regulation related to accredited investors, anti-money laundering, and KYC. Tokenize mass of quality real estate, like core commercial real estate and infrastructure assets, is also paramount to create the market. Develop issuing and trading platforms like Solid Block is a good example of a worldwide platform for issuing real estate tokens. Developing trading tools for digital securities, it will be the next phase of the development after the trading platforms will be in full power. Relating to that is the idea of real-time due diligence to support investors' decisions. Collecting real-time data using IoT and analyzing it by AI would link the blockchain network and smart contracts to the real world, enabling updating due diligence, support the investor decisions. A vision of transforming slums into smart urban villages. This vision could be realized by combining some of the concepts that I presented, global service economics, real estate tokenization, buying living as a service utility tokens in advance. Also, there is an opportunity to use the high interest rate in the developing countries as an investment opportunity for global investors in near zero interest rate environment. as the last speaker of the series of the roundtables, I call on leaders, entrepreneurs, investors, and sponsors to join us in realizing the vision to improve the well-being of a third of the world population who do not enjoy life in affordable housing. Let's take advantage of the unique opportunity of the COVID-19 that has undermined the status quo and facilitated a paradigm shift, combined with zero interest rates and technology maturity. Join us as mentors to help startups accelerate to change the world for the better. Thank you.
Thank you, Alon. That was great, as well as Jade and Eve. Again, thank you so much for the prepared remarks. I think you've given everybody a lot to think about. Xiaochen, we do have one question. Do we want to include Mira and so she can ask her question?
Yes, and before that, I want to just, again, thank you our speakers. And I think this is extremely important as the last roundtable of our theory, because as I mentioned that, earlier we shared that there's so many innovation happening using emerging technology to transform the sector. And of course, equally important is, the innovation in the financing space, from crowdfunding to impact investing to tokenization, using tokenization to add liquidity, in the space. And here you can see, I want to share this graphic with you, just to give you an idea. There's so many innovations out there, and in each step in the life cycle of housing, and having finance or having investments available to enable this solution to be just scale up in the near future is extremely important. That is not only investment opportunity, that you are actually making impact to many people's life. You are helping to change the world. So thank you again. And now that's, I'd like to just have our friend from the Humanity for Help to let me see where, I stopped sharing, and I would like to just invite, let me see, Okay, Mira, and maybe you can share with us what you do and a little bit, and also ask your question. And I definitely know, your organization has done a lot in the space. Yeah, please.
Thank you. It was a very helpful session. It was extremely fascinating to hear about so many interesting and innovative ideas. And, these are much needed, right? I mean, housing is quite basic, and, that is one area where we have not seen good ideas, and it's really interesting to hear so many nice ideas all in one place. So my question was, focus more towards Eve first, right? There are all these things, that people are promising in these crowdfunding. How do you evaluate whether, they may be able to deliver these results? Basically, your risk evaluation framework for these projects.
Okay, so we do a lot of due diligence. I would say I wouldn't call it complete underwriting. As a funding portal, we're really meant to be a neutral third party that just puts together investors with developers, but we take pretty seriously that we only want to list projects that we think can be successful. So there's quite a few things we do to evaluate. Everything from required evaluation through the regulations of the issuers themselves. We run bad actor reports. We have numerous conversations with them face-to-face on Zoom. So we really sort of get to know them. I'm a real estate developer, and the reason why I explained my background is that it's pretty easy when you've been in real estate to, when you start talking to someone, to understand whether they have sufficient experience or not. So I would say that's the very first step in evaluation. We require that developers have at least one project under their belt or have someone with development experience on their team, because we think that selling securities is one step harder and really not possible for someone who's never done a real estate project before. And then we look at pretty carefully at the market around the project to make sure the project fits in and what they're trying to build makes sense. So it's pretty well what a bank would look like, but would look at, but it's looking at it with a slightly different view of the need for creativity. And I would say that our investors are also really spread all over the map. We definitely have investors who don't care so much about the return. They're investing because they really want to support that sort of innovation. And then we have investors who care very much about the return. So we've had a project that didn't do so well, and many of the investors on a group email voiced the opinion that they knew it was a risk. They wanted to support the project. Things went wrong for a number of reasons, really out of the developer's control. And that's the way it goes. So I'm thrilled to have those sorts of investors on our site. I venture to say it's no different than any other sort of investing. It's always a risk.
Yeah, thank you.
Are there other panelists who have questions, or if not, I can certainly throw one out to the group. But I'd like to give the attendees a chance. No? Okay, if as we go through this, so one of the things that, as we talked about, there's both the public-private, nonprofit kind of ecosystem around. What I would ask is if you guys were able to kind of wave a magic wand and ask the government to support, progress and innovation, what would the one thing that you would ask kind of a local or federal government to do to help spur the innovation? And I don't know, Eve, you're off mic, so why don't we start with you, and then we'll go around.
Oh, I'm not going to hesitate about this. Debt, debt. I will tell you a story right now, which I think amplifies what is going on. And we have an issuer developer, same thing, who wants to raise money for a new product, a portfolio of 25 accessory dwelling units on the West Coast, which, as we know is a fantastic way to increase the affordable housing pool. And he's figured out a way to do it that is actually pretty inexpensive. And he came to us wanting to raise the equity for this pool of funds. He thought perhaps he'd need 30% or 30 or 40% of the total in equity, which in itself is outrageous. He should be able to do it with 10% equity, but that's what's happened over the last 20 years. That equity piece has increased to be greater and greater and greater for developers, but he cannot find funding. He's gone to CDFIs, he's gone to national funders, he's gone to local banks, we have looked at high and low for funding for him, and he cannot find a bank that will invest in the product for a couple of reasons. One is that it's new and untested, which is, again, in itself ridiculous, right? But, banks want to have, three like-kind projects as part of an appraisal, so they won't lend to it. And the second is the way he's planning this would be a ground lease. And so the bank isn't satisfied that the building itself is sufficient collateral. So now we have someone who's really, invested time, money, building a startup to help solve the problem, who's completely stymied by our financial institutions. This is just so fundamentally wrong, I can't even tell you. We're now trying to find a solution to help him raise the debt through crowdfunding. I mean, that's a lot for someone who's also trying to start a new product. So I think debt that is less fettered and specifically focused on creative solutions is like the #1 thing. Trillions of dollars.
Great, thank you. Alon or Jade, would you like to comment?
Yes, I think that the government can provide the right ecosystem, especially regulation. I think that what I presented, the form of accredited investor is a one step in the right direction to enable more, let's say, common investors be part of the of this market, and it will create a big change, because it will first of all provide new resources to the market, and from the point of the investors, it will enable to invest and to improve portfolios in new asset classes that will be much better and suitable for, let's say, pension portfolios.
Thank you. Jade, anything to add?
I think I'll pass this one. We haven't get any funding from government yet, but we do, like the as I mentioned before, like the nonprofit, which was kind of linked to the government. They have some like the funding people can apply for, like the one I mentioned, the facade credit. I believe the not just Baltimore, also other cities, the nonprofit also provide that too.
Great. Mira, do you have anything to add to that? I know you also are in this space.
No, nothing from me. Thanks.
It looks like Gregory has his hand raised. Did you have a question for the panelists? I don't know, Xiaochen, if you can unmute him. Gregory, is there a question you have for the panelists?
Yes, I did have a question. I was muted there for a moment. However, Eve, just a question on from the investor's perspective, what is the turnaround on investments?
Well, it depends on the project. We work with projects that offer a turnaround of 1 year to 10 years. So, you know, if it's an opportunity zone fund project, then the turnaround is going to be slower because you want to leave your funds in. It might be the turnaround that was offered on the 2 starter homes was 2 years. It's ended up being maybe 2.5 to 3 years. So it depends on the type of project. We don't prescribe a turnaround period or a return on our platform. What we're focused on is raising funds for high impact projects. That's really our product. So we work very closely with developers to help them offer something that makes sense to their project. There's no point in rushing a turnaround for a project that's going to take a long time to come to fruition.
Okay, thank you.
Actually, I want to add to that. We actually have one live at the moment that has a much longer turnaround period. And then we're going to go live with one, I think tomorrow, that is much shorter. So, you know, take a look on Wednesday and you'll see 2 very different options. Okay.
All right, great. Thanks a lot.
You're on mute, Xiaochen.
Yeah, Carlos has the question about the slides, and so we can ask the presenters if they allow, then we'll share the slides later. Yeah.
Mm-hmm.
Okay, so yeah, we are now 2 minutes before we end, and I want to just again say thank you to everyone, and just a couple of comments. One is, you know, on August 26th, the United Nations Secretary General Digital Financing for SDG Task Force launched the report, and the report was really to just using data to share with us. Digitalization is creating a new opportunity for everyone, and especially in the digital financing space, where that we are seeing the emergence of a citizen-centric financial system, which has never been there before. And no matter, you know, the innovation from crowdfunding, as Eva mentioned, or, you know, tokenization, as Alon mentioned, that's all those new innovations are extremely important to democratize the opportunities for everyone. And then when we look at the citizen-centric financial system, where that's each one of us, we're not only consumers, we are investors, we are, you know, taxpayers, we are savers. We can use our money to do many things, but without digital technology, it's too costly. A lot of opportunity are not available for us. And now that's with all this, you know, new infrastructure available, we are able to make, you know, SDG or sustainable development goal related decisions. We have a power and we have a tools to just make that power to becoming a reality. And just, you know, these days, there are so many exciting conversations going on. And today, that's Bloomberg has the Green Festival, and it will be the whole week. And you will hear from the world leaders, you know, how, you know, the actions are taken by non-state actors on climate change. And next week, there will be the, you know, conference by UN ASCAP on, again, sustainable development, where that you'll hear that many of the innovators join hand with the public sector to do this. And we, as you know, FinTech4Good is a small player in the space, and sustainable housing is really one of the key pillars that we think can really impact everyone's life. And using this roundtable, we want to just you know, bring all the stakeholders together and identifying new opportunities, building collaborations. And tomorrow we have another exciting conversation that we are going to have with Melissa Bradley, and who is a legend in the DC area, to continue this conversation. And thank you very much for everyone. And if you want to get involved in the digital innovation for sustainable housing, no matter from the tokenization or non-blockchain related innovation, you're welcome to join us, join this effort. And we are looking forward to just have you in, continue to just having this conversation with every one of you. And yeah, feel free to join our future dialogues or contact us for any inquiries. And thank you for our amazing speakers. And I know this is second time, and so really appreciate that you being available. And I think, you know, a lot of audience are the new audience, really, you know, and it's a great conversation. And thank you again.
Yes, thank you.
Good for having
Really
us.
appreciate it.
Thank you so much.
Thank you, guys.
Thank you. Have a great day.